Good morning, everyone. I'm Polly. Hi, Patty.
Hello. How you
Hi.
doing?
Good. How are you?
Yeah, good. It's a little rainy Wednesday.
I know. And it's the last week of June, last week of financial year. So we thought it's a good idea to run a webinar on end of financial year reporting. I think it's a perfect timing for you guys to think about that and perhaps create some of those reports that show you your overall business profitability, break them down into different aspects, such as time and expenses that you used in this financial year, and prepare yourself for the new financial year, I guess.
Mm,
Set yourself up for success. I
mm.
love this word.
As you said in a blog post that you wrote the other day, right,
Yeah,
Polly? Yeah.
maybe we should share that blog
Yeah,
post
that's
too.
good. I'll get it up.
Mm.
I think, yeah, today it'll be really good to explore the best ways to kind of review a few things in the years past, or the year past, sorry, in Streamtime, looking at the profitability of particular clients, making sure you can get any last minute invoices out for work that's been done, and you
Mm.
might need to do that. Uh,
Yeah.
before the weekend rolls around,
Mm.
and reviewing some team members' performance and seeing where opportunities for potential pay rises might lie,
Yeah.
which is always good. But then again, like reviewing the process is always a big part of that too, right?
For sure. And this morning we actually were making our coffee and we chatted to Andy, our managing director. We talked about our webinar today and he gave us some suggestions on the reports that he might like to see. So those are our suggestions and Andy's suggestions. However, we would like you to tell us what reports that you guys looking to generate in stream time so we can then look at those as well at the end of the session too. So it would be good to know what's really important to you. And yeah, and as Patty said, it's a perfect timing for all of us to review our business, review the processes, and just have a look and see where we at this financial year and are we strong to go into the new financial year.
Yeah, and how can you make next year stronger?
Exactly. And good time for pay rise,
And
exactly.
seems to be a recurring
Mm.
theme here today, Paul. Yeah, I think if if anything as well today, part of this blog post that I've just dropped in the chat bar there, which Polly wrote the other day, talks a bit about what you can do to strengthen reporting and process in Streamtime. So if one thing that you get out of today is maybe you do look at some of these reports that we run in your own Streamtime account and think that perhaps the figures aren't looking too good or perhaps as expected, what is a good thing to do is always understand the best ways to leverage Streamtime to get those strong reports to make sure the data is as clean as possible.
Exactly.
And we'll go through a bit of that today too,
Yeah,
I think.
for sure,
Yeah.
for sure. Before we start, a bit of housekeeping. Feel free to say hi, introduce yourself.
Yeah, please do.
Um, as I said, if you do have some reporting suggestions or you have some questions about certain reports that we're about to show you, please just use that section to ask them, and we will look into them at the end and
Yeah.
perhaps look at those reports that we might have not covered today.
Yeah, we'll come back at the end. We've got a few lined up, but as is the benefit with these sessions, you guys get to put those ideas in front of us and get answers immediately. So if you do have questions or things you want to talk about, drop them in and
Yeah.
you'll get your answers,
Mhm.
hopefully, if we can answer them.
We've got all your answers.
Oh,
Um, okay, so let's start. Buddy.
all right. Let me get the screen up. So
Yeah.
what are we going to look at first, Chloe?
Let's look at the WEEP report. So let's create a report on all the projects that we've got running at the moment
Mhm.
and have a look at what's been done so far on those projects, what's been invoiced perhaps, what's the budget variance. That should give you an idea of where you're at within that project, and perhaps maybe you can start invoicing a bit more by end of this financial year.
Yeah, I think the good thing about this report is to see which jobs you could probably readily get an invoice out for in the next couple of days. If you do need to meet a certain target or get across a particular line by the end of the month, Well, the report that we've got showing here is pretty clean in terms of having certain columns showing. We've refined it so that only a small number of active jobs that we're currently working on are going to be showing. So ensuring that your job statuses are up to date and you are archiving those jobs helps clean up your system so you can see this list. So this is our report. It's saved as a favorite. It's called Work in Progress.
Self-explanatory.
It's pretty self-explanatory. But there are a couple of filters at play here, so let's just run through them, shall we?
Yeah, let's do it.
Cool.
So we've got job status. As Patty said, it's really important to have those job statuses consistent and have them in play or completed. So those are your current jobs. Job labels are is not an internal job, making sure that it's not an opportunity as well, because those are your non-billable time or an opportunity work is not an actual job just yet. So you don't need to see that.
Totally. And just flagging that with these labels, these are ones that we have defined ourselves.
Yeah.
We use these labels to manage our jobs here. So non-billable jobs will probably be internal, having that label, and opportunity jobs are things that haven't quite come into fruition yet, but in our pipeline, you might say. You might have different versions of these, and what removing those labels from this list is doing is just stripping them out to make sure we're getting only necessarily relevant jobs and information. Yeah. And again, with those job statuses, we just want to see in play and completed. The reason for that is because pause jobs, they're probably not in play yet, meaning they've probably got nothing we can invoice yet. So we don't need to see them. They might just clutter up this list. Archive jobs, our assumption is that that job is archived because it's already been invoiced. That invoice has probably been reconciled. It can be forgotten about. Again, not really needing to drop into this work in progress list for us today. And that's it. That's it for the filters.
Yeah. So with columns, it's pretty much as well. It's all straightforward. So it's important to have the due date of the job there. So you can even filter it. So you have the most due job, the job that's due.
Let's flick that one up, shall we? So we can sort by due date.
Sort by due date. Thanks, Patty. And so you can see that first job that's due in 9 days. And then you've got your used and planned time in hours and in dollar figure too. Those are important because you can then understand where you're at within that job. And even looking at that bottom line here. So you've got total of used amount of time in dollar figures versus, planned time, and see overall you're tracking okay. Then you've got a total cost and total sell, this to show you the potential profit that you will be making.
Yeah, well, that shows you the current potential sellable amount. So currently you could be selling $175,000 worth of work in this instance, looking at that bottom right figure. And yeah, I think I just want to just touch on these ones, which you kind of mentioned before. It looks like we're currently about a quarter of the way through all of this active work. And even as a general rule there, already, that's kind of a good sign to be thinking about maybe starting to bill ahead to ensure that you have got revenue before you do, push ahead and, do that work. You want to make sure that you're billed for that work before you're doing it, I suppose. And depending on how you are invoicing, we often see people invoicing upfront. Typical invoice deposit of about 50% for larger projects is typical, or partial invoicing throughout in maybe like 3 or 4 stages does tend to happen. So by breaking that invoicing up throughout the course of a project means that you're able to be a bit more secure in your finances as they come through.
For sure. And even here you can see the total cost is 187,000, and what's been invoiced, it's only 200,000. So it's pretty close there. It costs you 187,000, 100,000. Yeah, 187,000, and you only invoiced 202,000. Sorry. So it's pretty close. As Patty said, it's important to stay secure and be secure with that and create those invoices in advance. You could see on the first job that our profit margin is minus 66%. for
Yeah.
example. That's all a test
Yeah.
job. It's all fake info, but it's a good edit. It's good for you to understand where you are within that job. And only 8,000 invoiced um, out of how much? What is that?
Out of well, I mean, the planned work here is about
30.
nearly $14,000.
Mm,
Our budget over to the right hand side here will show us about 16,000.
yeah.
Perhaps there were some expenses added in there, and even looking at this, it looks like of the used time, we've only used about a third of that, just a bit more than a third, but the cost is high. So potentially we've outsourced this work and haven't actually forwarded that invoice onto the client yet. They haven't necessarily paid for it. And given this one is due pretty soon, and currently we're running at a loss for it, I would suggest getting that invoice out.
Yeah.
It might be getting towards the end of that project. And in a kind of similar fashion, this one down the bottom here almost shows the opposite end of that, where it's 180 minus 182%, sorry, is the profit margin. And the reason those figures are so drastic with these in progress jobs is simply because we need an invoice on a job to establish a profit margin. And what's happened here is we've invoiced a small amount to start with, maybe like a commencement fee, but we've started working on this project and it does look pretty early in its development. It's like 37 hours out of 135 or 1350, so a lot of hours. So this is a massive project and we've only really just kicked it off and invoiced a very small amount to get that underway. I would probably be starting to think about sending another invoice in this instance, just to at least cater for the work that's already been kicked off. But it's good at least to know how you can look at these figures and then act upon them. Understanding just that those profit margins, especially with the active projects, they are going to shift as time is tracked and as invoices are sent out. They are going to jump around quite a bit, but at least what they can kind of let you do as you are tracking on those jobs is gauge where you're currently at. And, even a very simple overhead figure by looking at the current total cost of the job and the current invoiced amount shows us easily that, we're about nearly $10,000 out at the moment. So
for sure.
So it might be good to cover our bases.
You want to start your financial year strong. So if you can take action this week on those things and create those invoices and get paid before the new financial year, your numbers will look much better. And then you don't have to worry about that, because then it's going to be new projects, new jobs, and new financial year. And then when it comes to reporting again, you don't want to be looking at the same picture. So if you can take actions this week, do so.
Get it done. The one other thing we should discuss, or at least mention in this particular report, is looking at the budget and the budget variance. And the budget is often taken from an approved quote amount. When you have a quote approved, that figure becomes the budget for the project. The budget variance shows you the difference between the current, where you are currently at on the project. So I think it's the total sell amount versus, let me just remind myself. So based on the sellable price of all time and expenses used on the project so far versus that budget amount. So it really shows you how much of that budget is, left to go, left to churn, left to invoice as well. So this kind of shows us that there's about $338,000 worth of work that could really be billed. Can we get any of that out today ahead of time if you are trying to meet certain targets? So that budget variance is a good one as well, just to keep in mind. Cool.
Thanks, buddy.
What's the next one?
Right. So that's a good one. I found client profitability. We want to understand what is our most and least profitable clients this year. So right now, Patty is actually creating a report, and let's look at those filters. So we are looking at jobs that have been completed and archived. The reason behind it is that we want to see all the jobs that actually have been finished, and archived means they're finished and been invoiced. So there's nothing else to do for those jobs. Completed.
It means those profit figures are probably going to be pretty stable now.
Unrealistic, exactly. And then we've created them after 30th of June 2018. So the last day of the last financial year. So to start with this current financial year. So we are currently looking at all the jobs that have been completed in archive this financial year. And we've added a couple of columns there as well.
Yeah, we've cleaned up the columns in this one too. And you know, the first instance, I mean, the question we're asking here is, who are our most and least profitable clients? So what we've done is sorted this list by our company name, our client list. So when we are looking across these jobs, we're able to look at our clients together. Now, if you did want to get very kind of granular with your clients, perhaps you work with a few different clients or a few big clients as opposed to many, then you could also add a filter for each client and break this report down by them. For example, if I wanted to look specifically at Adobe and how all of our Adobe jobs performed in the last year, then I can filter this by just Adobe as the client. And then, you know, these columns, again, we have reduced them. We're just looking at profitability. So we're looking at the total cost of the project. That's how much did all the time and expenses cost us as a business? How much was that potentially sellable for? That's what the total sell is showing. The invoiced amount is showing us how much did we actually sell that work for at the end of the day. So the difference between those two figures can always be interesting too. And then the profit margin. Forgive this account. It looks like this is a demo account. So those figures a little bit slightly unrealistic.
Minus 109.
Yeah, not really showing off our business skills here.
But, not very good.
But yeah.
Buddy, let's look at all the companies. Yeah, maybe we can even filter it by the most profitable one. So if you go in total profit, even profit margin. Yeah. So right now we are looking at West Coast BMW. That's our most profitable client, and the least one is obviously on the bottom.
And we can flip that one up. And what this helps you make decisions about is the value of working with those clients. Are they worth keeping on as clients? If you do have opportunities to work with them again, what lessons did you learn from working with them? Should you be charging more? These are the kinds of questions we want you guys to be asking, or just being aware of, being conscious of, and being able to make those decisions based on the actual work that's getting output at the end of the day. Because if you spend so much time working on a project that you didn't actually love that much, it wasn't that great, and it wasn't even that profitable, then why did you do it? Do you have to do it? Should you be looking elsewhere for work?
Exactly. And like this report can be generated. You don't have to wait until financial year to generate this report. You can report on it every quarter, every 6 months. So always review your business and review your clients. And as Patty said, you don't have to work on some projects that are actually hurting you. So it's a good report to have.
Let's look at our team.
Yeah. Oh, I love this one too. Team review. So in this report, you can understand where your team time goes. It's gone for the last 12 months. So right now we are grouping this view by an item name. And all we want to see is our billable time, our team's billable time, and how much time has been spent on a certain item. And if you like, you can even put the busiest item, I guess, on top. So you can filter it by the hours spent.
I'm going to look at your time as well. I hope that's all right.
Okay, why not? All right, so it looks like...
Sorry, I'm going to add one more filter here, which is for the date logged, because we do want to just collect the time entries that were added after the 30th of June last year. So we're just looking at the year past. And then, we have got this one actually sorted already by hours here. So by grouping this by item name, we're able to look at Paulina's time across the areas of work that she might have done. And by sorting that one by the hours, you're able to hierarchically display, I suppose, where most of that time was spent.
Exactly. And those are non-billable time. Those are our billable time. So you can see, all right, so I spent the most of my time on sketch design because I'm a designer. Makes sense. But if I do spend most of my time on meetings. I mean, oh, that's the billable, that's the non-billable one. Um, there is a problem.
Yes,
We
exactly.
don't like meetings that much.
And one thing I just did there was include the archived jobs in there too, which I
Mm.
hadn't actually done before, but good to make sure you're collecting all those jobs.
Yeah.
So looking at Paulina's billable time, I suppose, but also maybe looking at Paulina's non-billable time, and understanding where that has gone, or maybe understanding at least over the entire year, how much of Paulina's time was spent on non-billable work, and how much did that cost us as a business? How much was that potentially sellable for?
Yeah.
And these figures down the bottom here will show you that. You're looking at the total of the cost of those hours. So that would be Paulina's hourly rate with overheads and profit thrown in there, broken down into a single hour. And then we compare that to the sell price of a potential, or the sell price of an hour, I suppose, based on how we've set that up on the job, on the item that she has tracked the time against.
Yeah, cool. And looks like here it's a perfect example actually. Annual leave. So looks like I only spend my non-billable time from taking leave.
Going on
But
holidays.
if you were to look at the whole team's annual leave time, yeah,
Yeah.
we can just look at your entire team holiday and annual leave, grouping by team member, and yeah, cool. Thanks, Patty. So we're just looking at everyone in our team who's taken leave and how much leave they took
Yeah.
this year.
And in this instance, we use a job itself, an internal job here to track all of our annual leave. So we're just filtering this time list for that particular job. All of our team members will add their time to that job when they've got a holiday booked in. And again, we're just looking at the year past.
Yep.
Across all team members, who has taken the most leave, but also who has taken the least leave. You had a nice holiday. Where'd you go?
Yeah, France.
France.
Yeah.
Sweet. How was it?
Well, very good.
Yeah.
Lots of wine.
Oh.
Lots of wine.
By looking
Very
at, but
Sorry.
no, just
You
relive
asked.
it.
You
I
asked.
feel like I'm vicariously living it through you. By looking at the team members that have spent the least amount of time on leave, allows you to, then perhaps suggest they take a holiday, or at least be aware of the fact that they haven't taken a holiday in a while.
Yeah.
Making sure that they're not burning out or getting close to that. It's important that team members take breaks. So being sure that you can get visibility over this really easily is important as well.
For sure. And Patty said that we do have a job called annual leave right now. But if you do have an internal job or admin job or something that you already set up with an item annual leave, you can search by an item here, which can be your annual leave item. So you don't have to create that job for annual leave specifically.
Could look something like that.
Yeah.
Cool.
Exactly.
Great.
Cool. How are we doing, Patty?
Yeah, we're doing all right. We're getting towards the last 5 minutes or so.
No questions so
No
far.
questions. It's been silent, but
I hope that's.
but you're all still here, so that must be a good sign. If you do have any questions as we're getting towards the end of the session, just drop them in. We've got one more thing that we want to just chat through, and it's around reviewing expenses of the year past. Just knowing how we can get a quick list of all of the expenses that have been used, looking at the cost, the sell, the markups across those, and just having them in one place. If you are reviewing those, if you do need to check any for tax purposes ahead of the 30th, then it's really easy.
Yeah, let's look at
This one here. So yeah,
it's called 2018-19 expenses. Okay, makes sense.
Makes so much sense. We've got a little date bracket there. So the date logged of the expenses. So when were these expenses actually added into Streamtime? After the 30th of June 2018 and before the 1st of July 2019. So creating a nice little bracket there. Again, we might just want to be looking at the jobs that are completed or archived.
Yeah.
It's possible that if these jobs are still ongoing, those expenses might be being tracked but not necessarily paid for yet. That could be, depending on how you use Streamtime, you might or might not want to include those ongoing and active jobs. But then in these columns, what are we looking at? Holly?
Yeah, so we're looking at obviously the job name where those expenses occurred, and expense name, and important ones are the cost, sell, and profit. So the bottom line should tell you how much profit that you actually made from all those expenses in last financial year, and your cost rates and sell rates, total sell and total cost. Sorry. On the bottom as well. So obviously you want to make this profit from those expenses because this money is coming out of your business. So it's important to get them recorded correctly and making sure that you do have a markup when you are selling it to the client. Patty also included another column, the markup column too. So you can even analyze that and see where maybe you actually didn't include a markup for certain expenses, or your markup is only 10%, which it doesn't really give you that much profit. So you can always create this report and get an idea of what happened within your business.
Totally. And knowing as well that you have got the option to look at these in your home currency or the currency that they were purchased in. Typically with these end of financial year reports, you'll probably want to be looking at your home currency. So just making sure you can check that. The home currency will be the one indicated next to it. So you have got the cost, NZD, but down here there is another cost as well. And when you select that, it'll show you the currency of which that expense was purchased in. And if for whatever reason you might want to take this list out into a spreadsheet to, crunch some more numbers, or at least import it or share it with someone, share it around with the team or your accountant, you can export this expenses list to a CSV as well. You can do that across all of these lists. Obviously, you probably know this, but always good to just know that it's easy to get your hands on this information to, do what you want with it.
Yeah. Well
Cool.
said, buddy. That's pretty much it for our end of financial year reporting that we think might be useful for you. And since there's no questions or no suggestions, we might park it here.
Yeah, sounds good.
Should we?
Let's park it.
Yeah. Thanks so much for attending, guys. We will see you next week.
See you next week. Thanks.
Bye.